Hi bafethu, happy Friday. Ngihle kubona nje namhlanje anindiboni because i-camera yam is not make sure. The lighting yam is not make sure. Um you guys have voted. So you voted between eKapa, Cape Town, and Centurion. And nithe Cape Town, 14 votes. The sample is small. Let's get more engagement. So sakwenza a Cape Town apartment. So in terms of where in Cape Town, maybe city center. We'll do Cape Town city. So a town, ne? Alright, so I like to order by most recent so that we can see the latest illusion. I'm not gonna choose anything too, hectic. Manete 1.2. And this time I'm also gonna open another tab and I'm gonna look for I'm worried about like history app. I should have gone incognito. So I'm also gonna look for rentals in the same area. So out a town still to rent. So we're gonna try and match it one for one. Okay, so we've got Woodstock, city center, we've got Woodstock. The trouble now is gonna be to try and match the exact apartment. So masizbuke every price is goma 850, 1.2, 1.2. You see it's at the high end of what we actually put in the most recent, which is interesting. And then the rentals, most recent at down goma 20,000, goma 13 and a half, a Loop Street, that's nice. Quick Gardens, a 3-bed. I don't want commercial. Nanfini house, apartment, or a townhouse. Okay. 2023 11 Woodstock. I like a Woodstock because I Woodstock with sales. Nalena, I like it because sinazo with sales. Nezone blue masithathe. Alright. So this is a 1-bed in Woodstock. It's very tastefully furnished. I think Napo used to live in this apartment. I don't know if you guys know Napo. He's one of my favorite content creators. He went on a hiatus, but now he's back on YouTube. Check him out, Napo HD. I think he used to live in this apartment based on his vlogs. Ironworks. Okay, it's quite nice. So 11.5, 57 square. That's quite generous in terms of the size for a down or down adjacent. It's got a shop, it's got security, it's fiber ready, the lease fee, 140 above if fees os batalayo. And yeah, I think it looks good. 11.5, we're gonna keep that. Then there's another one, Woodstock quarter. Woodstock is very lively, right? Town. It's and yes, it's comparison Gauteng, because I know a lot of my following is in Gauteng, but it's very vibey. I'm tempted to say Maboneng. There's also a lot of startups. Nase Salt River. There's a nice place I like. Tap room. It sells beer. I drink non-alcoholic beer, and they sell Devil's Peak non-alcoholic beer, and I absolutely love it. It's a Salt River, so that's sort of the vibe. It's Salt River, Nelanduka, Woodstock. It's very nice, very trendy, newly gentrified. That's why the prices are so ridiculous. And the city of Cape Town it was a corridor for investment where you could claim back immense amounts of money back under the development plan. I think since 2019, 2020, if I'm not mistaken. So over those years, it really went up. It says Zone Bloom Lena. Zone Bloom is close to District 6. And yeah, this apartment looks more regular, but the amenities look more impressive than Leah. And it's not too small. I like that in a bedroom is separate. Daitanda Lena. Daitanda. I says on a room 13 and a half. Okay, so we've got 11 and a half, 1 bed, 13, and then we've got 13 and a half. Okay, I think we're gonna work with 12 12k, between 11 and a half and 13, we're gonna work with 12k as a rental year, to irrespective of what we end up choosing we purchase, because we've seen like the amounts are roughly the same. So now let's look at a sale. Nansi Zone Blue. Uyayibona ubana yila apartment besiyibonile. Then lena Woodstock, number 1 on Albert. This is off of Main Road. This is Harbor View. Okay, this is also 701 on Albert. Okay, let's go with this one. That's the apartment we're going to be buying. The money to fake. Okay. It's quite small. I'm very against it built in. I'm very against it built in because I like utenisha. So now you can't do that. You sort of limited by independent and ndandithanda utenisha and sakwazi because dilale kitchen because dangihlala kuso. Akho chance. All right, so ibachelor nansi lounge yakho, nansi study desk yakho, nansi bed yakho, yobuntu lapha, nasi ne stove, pheka one plate at a time, nansi shower. Yesterday I did a video, like a series of videos, and I realized that I had spoken Xhosa towards the end. I can't get this, like I didn't hear myself. Obviously I want everyone to understand what I'm saying, but storytelling is very different to this. This isn't storytelling, so I think I can stick to English. But if you're telling a story about your life, then yeah, well, you can't really help yourself. And I'm not English. All right, so we've got the levies in 2000. It rates as snazo. We can see apartment in 980. It's 2k. It's recently listed, so I'm excited. I'm excited by that. Okay, I'm excited by that. Let's see. Then pool, yes, floors are laminated. Points of interest. Hout Bay is not 0.2 kilometers. I can tell you for free. Okay. 980 bond 9784. Yes, when is a once of cost. So you once of cost, mine are going to be a little bit different on the model. I use a logic as similar to Rosen's model. So if you go on the Rosen website, my numbers will be closer to that rather than this, but it doesn't really matter. You can add or subtract 5,000. It's not going to move the needle. And yeah, okay, let's go into our model. We've got the apartment that we want and we're ready. Okay, apartment city 1/5 or 980. I'm getting confused. Apartment city 980, market value 980. I'm not gonna lie to you, the way that Cape Town apartments are being snapped up, and this will forget discount up because I will be wasting your time. Right? Unless you're coming in with a cash offer, and we're not, because good bond. So unless you're coming in with a cash offer, it's very rare that uzayifumana that discount, albeit 10%, especially for investment property, especially ngase town eWoodstock naseSalt River. But my ronda Bosch napaya, like it's very rare. Unless you've got a deep deposit to show that you're serious, then they would entertain discount. So let's keep it 100% for now. We can always go seek and move those numbers around. So masiti and that deposit, transfer cost is 63. Uyayibona apha besina malini. Sorry, it is 63 now. Whereas here they're showing how much? 70. So it's about 7,000 rand. 980, 1 rand deposit. They're showing 70. I'm showing 63. It's not much of a difference, and I am confident in my numbers. You can just check out other calculators. Like I said, 11 is but 2,000. It rates. And I don't want to bring them down and say 400, which is what we saw on previous places. I'm going to say 500 because it's close to town, and town tends to have higher rates because remember the rates are based on the neighboring as well, because it's shared services. So if you've got a lot of high value houses in the area, then the shared services per square meter of your house or your flat or your apartment is going to typically be higher than in a lower housing area. I don't know if I explained that well, but yeah. Okay, let's keep this at 5. Actually, let's reduce repairs and maintenance, and let's keep management also down. Property management lease up, no, but we'll put a vacancy of 1 month. We're gonna put the at 10.5. Yeah, let's do 10.5 prime. Let's put this at 10.5. Let's put it at 20 years. Rental growth, we're going to put it at 7, even 8%, because this is Cape Town after all. We'll keep everything at 7 so that it moves together. Date of investment doesn't really matter, but must be current. Let's say we're going to start in September. 20 years, let's assume 6% appreciation. Again, Cape Town, so I think that's very reasonable. We're going to say that 3.1 million in 20 years time. Cost of sale, we're putting 5.5. Market value is 980. Rental amount, definitely not 5,000, right? We know that the rental amount was between 11,000 and we know that the rental amount was between 11 and 13. So we said we're gonna do 12. Okay, let's see. Oof! It looks juicy. It looks juicy. It looks so good. Oof! You're literally getting 14.1% leveraged. Mind you, the opportunity cost, I should actually bring this down because the prime rate went down. So this is probably 608 on FNB's website. That's just the cash rate. Mind you, you're not investing the full 980,000 because you don't have the full 980,000. What are you investing? You are investing the bond amount, which is about 10,000 a month. That's all you're investing. The cash flows that you're investing is that amount. So I try to go like on a very low savings rate, because if you are investing the full 700 or 980,000 for the bond amount, then it's tiered interest rates. So your interest rate will be higher because you are investing a larger amount. But here I'm assuming that it's this amount and maybe the levies that you're going to be contributing, maybe the rates and the allowance for bad debts that you're putting provision for. So that's about 13,000 that you're going to be saving. That's it. So that's why you're only going to earn 6.08% as the opportunity cost, or that's the amount of interest that you're you're foregoing. Sorry, that's the amount of interest you're foregoing by rather investing in this house as an investment rather than fucking maliaka with the savings account of like one of South Africa's banks. Cool. So it's saying it's a 14% yield. And then annual rental yield is 13%. On a leverage return, you're getting 14.1. It looks good. I'm not even gonna lie. It looks good. So you're negative for a couple of years, and then you start being cash flow positive as early as year 6. That is when you start being cash flow positive. That's very good. Year 6, you're making 6,000 Rand a year, which is basically an extra 500 a month. Right? That's positive for your portfolio as a whole. I've shown you my individual portfolio, and the importance of you having a cash flow positive is that the bank looks at your rental income and it looks at your income at the time, which would have hopefully grown as well, and it looks at this extra 500 Rand and it says, okay, I can lend Tando more money to add to a portfolio. Do you get me? That's the whole vision. The cross subsidy across your different houses or apartments or flats, so that at the end of it all, it's income that adds to your income, which helps with indoni affordability, so that you can add to your portfolio. It's a massive return, right? Because how much you put in? You put in like 63,000 plus like 1 Rand deposit. The important thing is like net present value, the amount that you're making out of this deal after the 20-year period, 136,900. That's how much you're making. We're not gonna look at unleveraged because this is if you're coming in cash. Obviously, badala la million, la 980,000 plus la 64,000 year transfer costs initially, and then after that you're cash flow positive because we're taking cash in. Because we don't have that kind of money, we're gonna be looking at the leveraged chart, which is what you have on the right. So over here you've got the leveraged cash flows. So initially you've got like 63,000 yeah transfer costs, and then you've got a shortfall of 29, and then in 23, which is about 3k for the first year. It's 3k a month. Then it goes down to about 2k. Then it goes down to about 1,500 a month. And then year 4, you're basically paying 1,000 Rand a month. So I'm in year 3 vibes. I've got a shortfall of about 16,000. So I'm paying about 1.5. You saw the portfolio. I'm paying about 1.5 towards each of all of my properties holistically. And then year 4 is next year. So hopefully this is where I'm going to be chilling. And then year 5 minus 1.9, which is you basically paying what? That's like 500 towards it per month. And then year six, 6,000, you're getting, oh, sorry, 100 rand or 150. And then here you're getting 500 in your pocket. And then it starts escalating. Like you're doing well. Let's look at year 10. By year 10, this property is paying you 17,000 per month or per year, sorry, which is about 1,500. It's paying you about 1,500 a month. That's healthy. That's in year 10. I want us to do something we haven't done before. I want us to do a goal seek. Ne? So a goal seek is basically when you use the data function in Excel and you tell it what answer you want, and then it solves for it for you. Masiti, out of this deal, I want to make 200,000. Ne? So that's gonna be my input here. I'm just gonna color zonga zindawo goal seek zam. Let me make them purple. Oh, purple mhlamba kazubonakala. Let me make it this orange. Ne? Let me make this normal so that there's no confusion. Okay, right. So this is what I'm going to be goal seeking. This is the goal seek. This is goal seek. Ne? I'm just going to highlight that. That's what I'm goal seeking, right? I'm going to hold for 20 years. I wanted to tell me what offer to put in to get a 200,000 in return. So these are my goal seek parameters. Yeah, I understand. Okay, so this is what you do. Ne? You go to that and then you say data and then uti what if analysis. So you're playing a what if. What if I put in an offer of 780,000? What if I put in an offer of 500,000? So what if and then uti goal seek. So I want to set cell. I want to set this cell. This is the cell that I want to set to evaluate 200,000. Why? Because I want to make a leveraged net present value at that 6.08%. In 20 years' time, I want to have made it 200,000 rather than 106,000. Yeah, 136,000. So it's okay. By changing which cell, the offer price. What offer do I need to put in? That's what it's saying. What offer do I need to put in to get a 200,000 after 20 years? 980, and then you say run. Then you say okay, and then it does its own thing, and then it's done. I need to put in an offer price of 925. That's actually not a lot, if we're being honest. That's not a lot. This is basically saying on this apartment in Woodstock, if you put in an offer of 925,000, which is 94.5% of the discount, ne? The rental is 12,000. It's a one-bed apartment. The rental is a 12,000. If you just put in that offer of 925 down from the full price of 980, ne? You can make 200,000 at the end of this over 12 years. How amazing is that? Let's look at the cash flows. What does that look like on an annual basis? So year one, you're still, in the negative. Transfer costs is 63,000. Year one, you're down 22. It's not too different, but it's, yeah. Year two, you're down 16, which is about 1.5 per month, the shortfall. Year three, you're down 10,000. That's less than 8. That's about 800 per month that you have to pay. Year four, you're down 3,000. That's 500 that you have to pay. No. That's 300 that you have to pay. 250 that you have to pay towards it. And then year five, you're positive. Yeah, 5,000. So it's giving you about 5,000 divided by 12. It's giving you like less than 50 rand. Is my math off? 416. Sorry, I don't know what's happening. And then year six, you up and get 12,500, which is basically 1,200 rand, 1,050 rand per month. And then you're obviously very cash flow positive at the very end, and the bonus amount is going to be higher on sale simply because you started off at a lower base. So your market value is still increasing, but because the bond is lower, because you get at a discount, the amount at exit is basically minus the outstanding bond and minus the costs to minus the costs to sale. So that's quite interesting. That's how EcoSeek works. Let me do another one. Let me be greedy. Let me say I want to make 350. So I want to set that cell to 350 by changing the holding period now. Yeah, let's change the holding period. Let me put in the offer of a 925, ne? But in Furukwan's 350,000. So how long should I hold this house or this apartment? Let's see. Okay, that didn't work. Okay, let's do let's keep this at 200, but let's change the rental. I don't think I can go seek for a length of years in this instance. Let's change the rental amount. Let's say in the 300,000, but let me change how much rent I should be asking for. Okay, so I'm gonna go seek this to 350 again, and I wanted to tell me what rental amount I should charge. Target value 350, current value 350. Okay, let's go. Oh, I only need to increase the rent by 1,000. So your rent was 12,000. It's basically saying if the charge is 12,998, which is only 1,000 rand more. So what you can actually do is you can add Wi-Fi, but charge more. So let's say you add Wi-Fi, and the Wi-Fi is 500, then you can charge 1,000 rand extra for Wi-Fi for the convenience that it's there. And then what else can you charge? I don't know, maybe you can charge 500 for parking. That's already 1,000 on your rent. And parking is free for you if you have parking in this allocated. So you've got an extra 500 on that, and then you've got an extra 500 if you overcharge for your Wi-Fi. Already you're 12.99. You're earning 350,000 after 12. What's the names? After the 20-year period, and you've put in a deposit of not a deposit, you've put in an offer of 925, which is only 95% of the offer price, which isn't not attainable. But I'm just saying, there's these apartments fly. There's a lot of interest in it, there's a lot of investment in it. I mean, we already saw it was 14% yield at 100% of that. So unless you're coming in cash, the agents are gonna laugh you off when you're busy signing an offer this low. Cape Town, Woodstock, Salt River, you guys saw how nice the apartments are. So just think about that when you're putting in a bit of a cheeky offer. Look at that. The agent's gonna say they're gonna make you stand by the balcony, go view, and then I'm like, look at Table Mountain. Lale kitchen, but at least you've got a view of Table Mountain. I think this is a common area. Yeah. You see that? This is a common area. This isn't in the unit. Yeah. Okay. Alright. I think, let me know what you guys think. The rental, dude, if I was shopping for an investment property, I'm not gonna lie, I would at least go for a viewing. It looks so good. Dumo. Like it's I haven't found a really good property, especially in Cape Town, in a while, that the yield looks good. In Joburg, usually Zonke sit down, the yield looks good. The first time I ran the model, I'm like, yeah, let's go. And that's because property prices in Joburg are lower, and like what's the name is a bit lower, especially at town. But at town, the bank can actually reject you, not based on your affordability, but because they don't want to cover that area. So that's something to think about. Okay, let me know what you guys think. You asked for a Cape Town apartment. I gave you a Cape Town apartment with a beautiful rental yield that and I gave you how to. If you just increase iland rental from 12,000 to 13,000, you can make 350,000 cash over 20 years, obviously. Let's see what it looks like over 10 years, because I know some of us are impatient. Over a 10-year period, if you're still charging the same amount, then you can make 37,000, and then you can 37%. Still over 20 years. Oh, the bond can't be 20 if the length of exit is 10. Oh no, it can be. My mistake. So 2K 9.3. Let's see what this actually looks like. Okay. You're negative or you're positive near 3 already, and then you exit here, and then you exit and you fetch your money. Yeah, and then nothing for the rest of the years. Oof, this also looks quite good. A 10-year holding period. 15%. This looks so good. Let's look at the monthly cash flows. Minus 55. It looks so good. I'm not gonna lie, it looks so good. Oh. Guys, if you don't hear me talking about this property again, then know that it's gone. Like whenever I open my next video, I'm gonna be like, let's check on our Woodstock property. I'm gonna log in, Pro 24. I'm gonna heart it and I'm gonna keep shimmering it. Thank you so much for watching. Really appreciate you. Yeah. Tomorrow I'm going on a bike ride. So yeah, I'm gonna show you snippets of that. I'm really keen. I got a bike rack, a bike rack of a guy on Facebook because angisabi lutho, as you know, the cool Zulu people would say. So yeah, check that out tomorrow morning. Thanks.